Okay, this is day 3 of our trial period. I wanted to cover a couple things. Had quite a few questions come in. One of the questions that I think is important to cover is the question was this was on the ES 612 tick chart. Market opens again my time 7:30 U.S. Mountain Time, and the question was, hey, there's no boxes. Is something wrong with my charts? So, here the market opens, and you can see for quite a long period of time we didn't have any boxes. And the answer is there's nothing wrong with your charts. It's just the way it is. Remember, the box is detecting a very specific set of parameters, and if they are not present, then there will not be a box. And so sure enough, it took a little while. So by about 8 o'clock, so about a half hour into the market, then we finally get one. We get a small winner here, and then the rest is history. I'm not going to go over the ES today. It was from Thursday. It was very profitable. We nailed this purple line here, and the rest is history. But I wanted to just mention that boxes form when they form, and there's nothing that you can do about making it hurry up. You just have to be patient, and so that's part of the nature of the beast, is patience. Some days you're going to have a lot of boxes. Other days, you might just have 2 or 3 or 4, depending on which market that you trade. So bottom line, if you do not see a box, there's nothing wrong with the software or the indicator. It just means that the parameters the box looks for have not been met yet. So what's kind of nice about it is by now you know that a sound goes off when a new box forms. And so what I like to do is I like to get some work done or do some other things, and I have my volume up. And so as soon as I hear the chime, then I can go back to my computer and get ready for the trade. And so it's really kind of nice that way. I had another question come in about the Russell. Apparently there's quite a few Russell traders. The symbol is TF, and so I wanted to go over the Russell, and it actually it's pretty good timing because there are some situations that happened or that formed on the Russell that I think are important to bring up. Okay, so when I trade the Russell, I prefer a 100 tick chart. Why? Just because. Everyone's going to be different. You might like a different chart better. This gives a pretty high win ratio. I like this chart. I trade the ES more than I trade the Russell, but I like this chart. It's very fluid. It gives nice trades, and by now you know that you can put the box on any kind of chart, any time frame. Range charts. You can do a volume chart, but I like, this is what I like. So what I'm going to do is review the TF in a 100 tick chart. So again, my time 7:30 market opens, and so we have this first trade here. Let me talk about something really quick before I go into depth on the Russell. You've seen a few days now of the market react to the box, and a lot of you are quite impressed, especially with some of these runs that we've had. Now, it's very important that you do not get greedy with these trades. It's very easy to do because the win ratios are so high, and you see a lot of these runs that go for 2, 3, 4, 15, and recently we've seen 20-point runs. And although it would be nice to get 20 points in a trade, we always have to remember as traders that the number one objective and the reason why we trade in the first place is to make money. And so what we have to do as traders is to really harness those quote-unquote greed emotions and do the job, get the job done, and that is to make money. And so just because you see a 5 or 10 or 15-point run, it doesn't mean that, that's not our objective. Our objective is not to get 5, 10, 15, 20 points. Our objective is to make money. And so basically what I'm saying, the bottom line, is that you don't have to take profits where these dotted lines are at. As you can see, it's very accurate. In most cases, price will get to these dotted lines, and in a lot of cases actually react to these dotted lines. But you don't have to do that. Some of our most successful traders, they'll take 2 or 3 ticks is all on a trade, and they'll be done. But you have to keep in mind that they trade a lot of money. They trade what is referred to as size, and so 2 or 3 ticks, that might not seem like a lot, but you have a lot of contracts in there, and you don't really need to trade a whole lot. So just keep that in mind. Just because we have these big runs, it doesn't mean that you have to try to get everything out of those runs. In the first video, I showed you a technique, a very effective technique, to capture a majority of those runs in a lot of cases. But keep in mind, the number one objective is to make money, and so based upon your risk tolerance and your capital size, just make sure that you are pulling out when you feel comfortable pulling out, or in other words, taking profit when you feel comfortable taking profit. So if that's before we get to the blue line, either direction, that's perfectly fine. You don't have to take profits at the blue line. You can take a couple ticks. You could take on the Russell, you could take a half point. Whatever you feel comfortable doing. So this is the Russell market open right here, and our first trade is actually, in all technicality, it's actually a loser. So by rules of engagement, you'd lose this, unless of course you're only taking 2, 3, or 5 ticks on the Russell. Then of course you would have won this. But for argument's sake, this trade would have been technically a loser. But then you win this one, and you win this one. And this one actually is a loser, but this loser is minimized because we have another box form. This long trade was minimized because we get a signal to go short when this box forms. And so you cut your loss here, you're short, you take some heat, but then you win this trade, and this one actually turns out to be a winner. And by this time, if you took that first trade and you lost it, you're most likely positive by the time you take this trade, because you win this one and then you win this one, and this hits both targets. Okay, so then you lose this one and then you win this one. This one also hits the first 2 targets, and then you win this one. This one runs for miles, and this is the type of trade where, based upon the concept talked about in video 1, you probably would have got your first, your second, at least if you do it that way, and then you would have got filled on this one. Unless of course you do it differently, then whatever happened. And then you probably lose this one, you win this one, and you win this next one. It hits the second target, and of course you win this one, and we're only 2 hours into the day, and then you win this one. Okay, I want to talk about this one. So what to do in situations like this. Okay, so you see we have a double box here. I talked about double boxes, I think on video 2. So if you look at this trade, you're in this and you're pretty much negative from the get-go. And this you take quite a bit of heat on this one. And we get to the tick of the bottom of the first box. Now, everyone's going to be a little bit different. Like I mentioned, you're going to have different risk tolerances. You have different capital sizes, and you're able to do different things with whatever capital you have. So and when I say this, I don't say this because of what happened. I say this because historically, the way that at least myself likes to trade the box is when we have a box form and then we have another box form, I'm going to base all my decisions off that first box, because typically if you have a box inside of a box like we have here, the box that forms after the initial box is typically going to be smaller. And so I'm going to base all of my moves off of this initial box, meaning that my stop loss, as you already know, I like to place a tick below the box. So if I'm a tick below the box, I get pretty close at a tick away from getting stopped out. So this is not a losing trade. And so this one turns out to be a nice winner. So this is important for me to point out, because as you're learning how to do this, which it's pretty simple, okay, we get a box here inside of a box. Where do I place my stop? Well, first of all, you can place your stop wherever you want to, wherever you feel comfortable. The way that I like to trade it is based on the larger box. Now, you'll notice that you do not have any of the red lines or the targets on the second box. It's never going to happen until we've extended beyond a period of time and had a new box form. Okay, so you have to also realize that that if you're going to trade off of the preceding box that's inside of the box, realize that the targets are not given. The targets are based upon the first box. Okay, pretty straightforward. Okay, so this is a winner, and by this time you're probably up quite a bit. Again, the Russell, the TF, it's at $10 per one tick of movement, and we've got quite a few ticks of movement here. So it depends on how you like to trade. Maybe 1 to 2 hours a day or 3 hours, and I mean you're up quite a bit by this point, and we're almost 3 hours into the day. So if you continue trading, so this is the one I wanted to point out. Okay, so we have this box form as you see, and so this trade obviously wins here, but then we have this box form that's inside of this box, and you notice we don't have targets. So the targets are going to be based on the size of the box, and so you have to realize that the targets on this smaller box, they're not here. The blue line probably would be more like here or here, but what you also have is you have this signal that came way down here. Okay, so the box formed and our signal came, pretty large gap between the bottom of the box and where this candle is. And so as I've mentioned before, trades that form like this, I prefer to wait or anticipate price pulling back towards the box. Now, I just mentioned that the way that I trade boxes inside of boxes is based upon the initial box that's set. So I didn't trade this one, but had I traded this one, you'd see here that technically you would have been stopped out, but actually you wouldn't have, because if you're trading based upon the greater move, then that stop loss obviously is here, and so you would not have been stopped out of this. I don't like trading trades like this because it's way too small, and again, if you were to imagine the lines, the midpoint being right here, the first profit target probably right here, either side of this thing, it's just too small. I need more movement than this, so I stay out of this stuff. So for this very reason, it can get choppy. It's just too tight of movement to do anything with it. So another reason why the way that I trade the box, I prefer to base my decisions off of this original signal. Okay, so that also means I'm not in this one either, even though this one runs pretty good. Okay, so I'm out. I would have taken this one and just waited, even though this one has a pretty nice run. Okay, and so then this one here, we kind of sitting into some consolidation here. This trade here, you take quite a bit of heat on this trade. It wins it all the way over here. Okay, it nails the blue line, and then you're in a short here. And so this is another thing I wanted to bring up. So the question naturally would be, okay, we have a box here. I'm in short, and I'm not out. I haven't been filled yet. I haven't taken profit. I haven't taken loss. What do I do in a situation like this? Well, the answer, of course, is you're going to do whatever you want to do. So whether you get in again, it's up to you. Whether you just hold this because you get your sell signal, this should be an extra confirmation to get out. Now, what I prefer to do, if in a situation like this, I prefer to take profits on this trade, here, somewhere in here, because just like I've mentioned several times before, anytime price reaches one of these targets, it's very possible that price can work its way back to the midpoint. So knowing that, I want to get out. I've sat through a lot of back and forth. I'm done. I'm out of this thing. So this trade, I'm taking profits here rather than waiting all the way to here. Even though it worked, you don't know that that's going to happen. Okay, so just keep that in mind. So now we're nearing the end of the day. We have another trade here. By this time, I mean, you're up so much. I just can't imagine. I don't sit and trade, market open to market close. But this is a very profitable day on the TF. In fact, if you look at, look for yourself. This entire week that you've had the trial of the box, I mean, you would have made a lot of money on the TF. So, anyways, so the market's done by that point, and the rest is history. So a couple couple of those things to really take into consideration. It's not complicated. I'll say this for the third time. We wait for a box. That's it. The box tells us there's a high probability situation forming, meaning a trade. Okay, and so the direction or the arrow tells us the greatest probability of direction. And so when we get an arrow, we get in. And as I mentioned, I think in video 2, a market order will guarantee a fill, obviously. So if your market here, I mean, you're within a tick or two of the bottom of the box, and so that's a really nice fill. And so you should be able to get you know, a good half point out of this trade, or this one if you got in here. And lastly, just remember, you know, yes, there's a lot of nice runs, but at the same time, don't let that cloud your judgment of being profitable. Okay, so again, the number one objective of trading is to make money. And so just because we have a target, you know, maybe it's a point away, maybe it's 2 points away, it doesn't mean that price is going to get there, and it doesn't mean that you have to take profits there. You can take profits anywhere in here and be satisfied. I have a couple traders that trade this, and you know, they don't try to go for very much. When they're at 250 bucks for the day, they're done, and that's usually 1 or 2 trades. So they make 1 or 2 trades a day and they're done. They're happy. That's fine for them. Everyone's going to be a little bit different. You know, we have a trader who manages 2 trading firms, and he was part of our original test group, and his win ratio was well above 90%. So he's losing about 1 out of every 18 trades. I know that sounds, you know, a little bit unbelievable, but now that you've used the box for a while, it's a lot more believable. But he's very good, and he does not go for very much. He's a 2 or 3 tick trader, primarily trades the ES. So everyone's a little bit different. Just keep in mind that the objective is to make money, and that's it. So we're here to do a job, which is to make money. We get in to a high probability trade, we take our money, and we move on to the next one. There's always going to be another trade. You know, if you see a big run, oh man, I wish I would have got into that. Don't worry about it. Go to the next trade. Okay, then lastly, really quick, I've had several questions come in about Forex. I'm really not a big Forex trader. I will dabble in it a little bit, but just to answer your questions, we've had several questions come in about Forex. I'll show you an example. This is the Euro Yen, and like I say, I'm not a big Forex trader. If you are, just play around with the different charts. This is a 4 range chart, and like I mentioned, I don't remember if it was video 1 or 2. Don't get caught up on the chart. If you've been trading for 10, 15 years or whatever, and man, you have your own chart, it's what you use, and the box, it's kind of mediocre on that chart. Don't be married to it. Don't be bashful about switching charts. The objective is to make money, and if a 4 range chart accomplishes that objective, then use a 4 range chart. So I don't know what hours you like to trade Forex, but if we just look at, you know, here's market open. So market open, equity, anyways, US time is here right after this. I do want to mention this though. So let's say you open up your charts, and let's say you open it up and it's about, you know, somewhere in here, and you see, oh hey, we're in this short position. You know, does that mean you just get into the position? I don't know. I guess it's kind of up to you. I'm not a big fan of, I don't know if you'd label it chasing trades, because, you know, technically you'd still be in this trade, but you know, it's kind of up to you on what you want to do. What I have done before is, if I notice, and this is kind of a really bad example, but if I have noticed that we're in a trade and I can potentially get a better entry, I will do that sometimes. I don't do that too frequently, but I prefer to wait for, you know, a fresh signal from the time that I open up my charts for the day. So whether you trade this one or not, if in fact this is the time frame that you trade Forex, obviously, you know, you may or may not have won that trade, depending on how you take profits. Obviously did not make it to the blue line, so technically speaking, this may have been a loser for you. You would have won this one, you would have won that one, you would have won this one, you would have lost this one. So If you did not take that first one, this would have been the first loser of the day. And again, I don't know what hours you trade Forex. I'm just showing you an example. You would have won this one, you would have won this one, you would have won this one, won this one, winner, winner, winner. Market's closed by that time. So 10 winners, 1 loser, or 9 winners and 1 loser, depending on which one you took. So all in all, very profitable. This 4-range chart. I do know that there are other. We have another Forex trader I know specifically that uses this. This is why I showed you this. But very, very profitable. I don't know. I'm not going to do the math on that for you, but you can just pull it up. Do a euro yen. You can do anything. You know, I know that different charts work differently for different pairs, but this is a very, very profitable setup right here. So if you have any questions, send them to support@predictionpointtrading.com. We've had an amazing week of box trades. This week, as you already know, you have the indicator. You can go back as far as you want. Last week was no different. We may not have had as big of runs, but very profitable. So again, just remember, keep it simple. Don't overcomplicate it. Blue arrow means buy. A red arrow, it means sell. If you don't want to sell or you don't want to buy, then don't. Just stay out of the trade. But it's that simple. We wait for a box, and the arrow is our trigger to get into the trade. And I've explained to you 2 or 3 times already how we like to trade it. It's very effective, and as you've seen yourself, now that you have the indicator, this is a very profitable, very lucrative way of trading any market.